Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast, The Week That Was. Before we start, wishing Happy New Year to all our listeners. Indian assets were off to a weak start to 2023 amid mixed global cues. Minutes of the Fed's December policy showed policymakers were concerned about easing financial conditions too soon, but remained conscious that lagged cumulative effect of policy tightening could end up being more restrictive than necessary. The minutes suggested, despite the contraction in manufacturing, policymakers are unlikely to pause tightening in the next few months unless they see signs of a sharp deterioration in overall economic activity and the job market and a sustained decline in inflation. However, major indices staged a strong recovery on Friday as data showed a slower US wage growth and new job additions. The S&P 500 index, Dow Jones and Nasdaq rose over 1% for the week. Indian equities consolidated this week and underperformed global peers. After a positive start to the week, the Nifty index trended lower for 3 consecutive sessions, falling 1.4% for the week. Broader markets outperformed Nifty, with the Nifty Mid-Cap Index and Small-Cap Index down 0.3% and 0.8% for the week respectively. Among sectors, FMCG and Pharma were the best performing sectors with gains of 0.5% during the week, while banks, utilities and IT were the worst performing sectors with cuts of around 2% during the week. Indian fixed income markets came under pressure as the US bond yields rose after the release of minutes of the US Fed policy meeting, and domestic investors started pricing in a rise in bond supplies in the upcoming union budget. For the week, the 10-year Indian government bond yield rose by 5 basis points to 7.37%, while the 3-year and 5-year Indian government bond yields rose by 2 basis points and 4 basis points respectively. The INR closed flat for the week at 82.7 per dollar. Rising US bond yields, strengthening US dollar, and foreign investor outflows pressurized the INR. However, a sharp decline in crude oil prices helped contain INR losses. During the week, we had a few macro data published. The first set of data was on India's PMI. India's manufacturing PMI rose to 57.8 in December from 55.7 in the prior month as output growth continued to remain strong. New orders and buying levels grew at a stronger pace. Cost pressures were muted with the rate of inflation nearly flat. Sentiment was upbeat due to growth prospects that were supported by advertising efforts and strong demand. India's services PMI rose to 58.5 in December from 56.4 in the prior month, supported by strong growth in both new orders and output amid favorable market conditions. Pace of job creation was above its long-term average but eased to a 5-month low. Input cost inflation stayed high amid higher prices for energy, food, transportation and wage costs. Business confidence weakened slightly amid concerns over rising cost pressures. Overall, composite PMI rose to 58.5 compared to 56.4 in the prior month. The second set of data was on India's economic output for fiscal year 2023. As per the first advance estimates released by National Statistics Office, real gross domestic product and gross value added are expected to grow at 7% and 6.7% respectively. These estimates are higher than the RBI's and World Bank's growth projection for India in fiscal year 2023. We would also like to invite you to join us our Global Market Outlook webinar 2023 on the 11th of January. You can register on www.sc.com/GMO. The GMO stands for Global Market Outlook. During the event, our Global CIO, Mr. Steve Bryce, will cover our CIO office views and take your questions. We will also have a fireside chat with Mr. Mark Carney, who has served as the Governor of Bank of Canada and the Bank of England and is now Vice Chairman and Head of Impact Investing at Brookfield Asset Management. That's it in this episode. Thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.sc.com/in.